Hello, Oracles. Welcome to our outside of the Tesla stock echo chamber. So now just want to preface tonight. I'm going to introduce Adam in a minute. Jen is not going to be able to make it on tonight. She had something come up last minute. Tonight is not about being bearish. Tonight is not about, beating down Tesla stock. Adam and I are both very bullish on Tesla as a company. We believe that the company is going to do very well long term, but there are some things in the near and medium term that we should be paying attention to that could actually present us with the greatest buying opportunity that we've seen in over a decade. And so we go back to the times where we talk about fortunes are born during bear markets. This is that market that we could build that fortune. So these are the times where it's born. So we're going to discuss tonight what the potential worst case scenario is, just to kind of put it in the back of your head. This is what we talk about all year long. Prepare for the worst, hope for the best. So we're going to be discussing what could be the worst and things that we can do to prepare for it so that over the next 2 years, we can bust our butts so that when we hit the next bull run, we will be able to enjoy it even more. So we're going to welcome on Adam here. Adam, thank you so much for joining us tonight.
Thanks for having me, Tim. So it's a very, very sensible introduction there. So it's, sets the frame well. Thank you.
Yes. And again, so I apologize to anybody who's going to hop on in the middle of this, because if you did not get that beginning, you might jump in and think that we're going to be just beating up the stock. But that is truly not what we're going over right now. There are going to be some charts that we're going to discuss tonight that Adam is very good with. So he'll be going over those. So Adam, give us a little background on yourself and your history.
Yeah, sure. So my background is physics. I have a couple of businesses. I live in the UK. My primary business is I'm a nutritionist. I have a marketing company. I'm a very bad first-person view drone pilot. And I have been investing and trading since about 2000. And I have probably made every mistake out there. I lived in the States for a couple of years, and this was around the dot-com time. And my most spectacular time when I thought that I was wonderful was when I bought Amazon stock, and I think it was like $1.50. And 8 months later, I think it was like 43 cents or something like that. And I was like, oh man. And I was like a 20-year-old. At this time, I thought I was amazing. I bought this stock, this company. What can go wrong with this company, right? And the reason I'm mentioning that is because there are analogies in here. There are analogies, from top to bottom. Some really bad things happened with Amazon stock, but what was happening? Amazon, the company, was getting better and better and better at that time. So with respect to Tesla, my first sort of intro into it was I was aware of Elon since around 2010. And then I started to get interested in Tesla. Who are the company? Do they exist? Are they real? And this is a genuine question. I live in the UK. I was like, are they a real company? Is this actually something? So in November 2015, I went, it was on Black Friday, 27th of November. I went to Deer Creek Road or Deer Park Road, whatever it is, in Palo Alto. And I went there and I looked at the HQ and I went there. And I had a look, and there was a Tesla Roadster parked out the front. And I was like, yeah, company checks out. It's legit. And I had to walk around. And this is important. If you are buying shares of a company, you want to know what that company is.
Especially if you've been through the dot-com bubble where there were a lot of companies that weren't real.
Exactly. And this is the thing. So I thought, fool me once. Okay, fair enough, whatever. But the point here really is, and this is critical, because whilst I may well be bearish, short, possibly medium term on the stock, and we'll talk about that, with respect to the company, what I've noticed is that people who are the most fearful typically have the least knowledge of the company fundamentals. And this is crucial. So the time that I went actually going there and looking and just going, hey, does this company actually really exist? And seeing that, and then doing the research, I listened to the audiobook by Ashley Vance on Elon, listened to that, went through it. And only at that time, after what I would suggest was probably 30 to 40 hours of deep knowledge about the company, at that point did I start to purchase Tesla. It was only at that time. And I think that's important.
That's one thing too. And this is why, we wanted to do tonight, which is outside the echo chamber, because it happens on both sides of the spectrum. If you're just going by what other people tell you and you don't do your own due diligence and research, you're not going to learn these things. It's good to be critical of something that you're going to be investing your money into and really dive in. And then as you do, you learn this company actually is really good, or maybe you find out this company actually is really crap.
Yeah, and that was it. And when I looked at it and I looked at the car and I was like, okay, I like that. And the Model S was starting to get quite popular in the UK, and there were sort of a few little dealerships popping up. And I went and test drove the vehicle, and I thought, yeah, this has got legs. This is going somewhere. Yeah, so that and I would do the same. You know, whether I was buying one share of a publicly traded company or whether I was buying into a friend's business, whether it was some type of merger I might be doing, some type of small acquisition I might be doing, it doesn't matter. That type of research is really, really important. You know, looking back through the books, you know, for a couple of years, whatever it may be. This is the stuff that helps you get through these times, and this is important. So I reiterate that point. It's okay to be bearish about a stock, but if you understand the company, it may well reassure you, and it usually does.
Right. And that's exactly where we're at right now is, you know, we talk about it on my channel all the time is we need to really focus on the fundamentals of where the company is going. And right now we have a massive disconnect between the fundamental growth of the company and the stock price. And that disconnect isn't directly related to Tesla's fundamentals. It's more macro related and a bunch of the drama that's going on with Elon and Twitter.
Yeah.
But that's just a piece of it. And that's a lot of what we're going to talk about tonight is a lot of how the macro is affecting this disconnect. And it's not just Tesla, it's a disconnect with all stocks just because of where the economy is and where we're headed. So Adam's going to kind of give us, you know, some perspective as to where we could be headed. And I know that was, you know, one of the questions here that came up is, you know, why not wait until the dust settles? It's not like anything has changed with the macro looking forward. Exactly. And that's what we're going to go over tonight is when is the dust going to settle? When would be a good time to get in? You guys know I add every single day. With where I'm at right now, and Adam and I were talking about this before, we'll bring it up tonight as well, is, you know, the cash flow generation. I reiterate this all the time is the cash coming in from the outside is so vitally important. Think about Tesla themselves and how they've set themselves up. They have almost no debt, a giant stockpile of cash, and a ton of cash flow coming in. That is the ideal setup to be able to go through the next year. And if you can do that for yourself, that's perfect. And so, you know, when the dust is going to settle, we don't know. Again, we'll talk about it tonight, and we'll have Adam jump into some things in a minute about that. But so when do you think that the dust is going to settle?
Well, the truth of it is, my opinion is irrelevant.
True.
And what I mean by that, to give it context is everything. What I mean by that is I look at the charts. So I made some notes back in, I think it was March, and I'll bring it up what I wrote because nothing has changed. So I wrote down, and I often make notes on these types of things. I wrote what will decrease equity and as such. I put war gets worse. Okay, so this is a macro stance. There's a debt crisis. Well, we're seeing that. Fed starting to tighten as such. Okay, we're seeing that. Inverted yield curves. I mean, there's lots of them, but we are seeing that. Okay, rising dollar strength. There's a bit of a disconnect with that at the moment when we may well look at the dollar basket of currencies versus others, that there might be something. Inflation is obviously a problem. We've got an energy crisis and we've got commodity price shocks. Now, that's something that I wrote back at the start of March, actually. And we can look at that in a bit of detail with some of those things. But the reality of it is, none of those things have changed. So with respect to when's the dust going to settle, well, nobody can ultimately answer that question. But there are hints that we can look at. To suggest that this is identical to previous bear markets would be naive, but to ignore them would be even more naive. I've rattled through several of these bear markets, and they can be very, very brutal. They can be very brutal if you own a stock which, one, doesn't pay a dividend, and two, is in a sector which is deemed to be growth. And particularly if you get sort of noise around it, almost like hype or meme or whatever target word you want to use, where people start to spew out things such as saying value doesn't matter. Whenever you hear that term, it means value matters a lot. Right? Yeah. So it's a difficult question to answer, but we can look at some charts if we want to and go through those types of things if we think that's useful to do so.
Oh yeah, visuals are always helpful. So if you've got some charts that you want to some charts you want to put up and share, that'd be great. because,
Yeah,
and again, so you guys know, to preface this, Adam is usually pretty bearish, but it's more of a very conservative bearish. It's more to protect himself. And obviously he's been through a lot of this, so he understands how it works. And this is just a good perspective to have. So sure, when you can make a ton of money, like some people who are going on margin, but those people can also lose a ton also. And you got to be real careful. So this is more on the conservative side of things, but it's always
yeah,
good to have this perspective.
yeah. So I would classify myself more of a trader than an investor.
Okay.
And I would just to define that, I would say up to 6 months long would be my trades typically. That's not to say that I wouldn't hold anything for longer, but typically I would be more looking at something as a trade. That's typically where I am. Now I have certain rules that I impose upon my own trading, which are non-emotional. Now some of this will be technical analysis, and I don't want to necessarily bore you or myself or your viewers with that. But there are just a few things which I might put in place. For example, if I see a base trend line and it gets broken, I get out. I don't care what it is, I'll get out of it. It's as simple as that. Why? Capital preservation. Simple as that. I need to preserve it. It's very important. That's one thing. The other thing as well, and this is really the only two I play around with. The other one as well, if something goes vertically up, I get out.
Oh yeah, you get the momentum swing. Oh yeah.
Everything over the years has taught me that anything that goes vertically up will come down very, very quickly. And
And you could look at swing trade charts all day long, and that's exactly what they show.
Yeah, and I try to. I mean, you'll get people that will trade the VIX doing this type of thing, but I will try and look at this. But I tend to use longer time frames, and I think this is important as well to talk about this evening. A lot of people, and I see this on Twitter in particular, but I also see it in a few discords that I might play around in. People are sitting on low time frames, 5 minutes, 15 minutes, 1 hour, 4 hours daily. Oh, it's a green day. Oh, it's a red day. That's not what's important when we're talking about a company that is measured in decades with respect to growth. This is the important thing. We want to be zooming out, and zooming out is important, not necessarily to go, oh, look how far we've come, but it also might influence your decision as to what you should be doing next as well. Going back to that question about when the dust settles, we'll talk about that, and I think that's useful to be playing around with.
Yeah, and now for you guys who know, and a question to you is, obviously, Adam, a swing trader, 6 months is usually what he goes in.
Yeah.
Here we talk about how, we look at the charts on a daily basis, but the charts don't really matter for a very long term. If you're holding for decades, looking at the charts really isn't going to matter. It's the fundamentals that are going to matter long term.
Exactly.
But for those of you who are trying to get your emotions to understand why things are happening, that's why I track the charts with you guys. And that's why tonight is important, because for the emotional side of things, it'll help explain to you guys why things are happening so that you can take your emotions out and then understand why this is a buying opportunity versus the world coming to an end.
Yeah, exactly. And I think that's important, because it's very easy to look at this and go, oh my God, we're X% down this year or whatever it is, or since you possibly bought. But the company's still there. It's still doing everything that it should be doing, if not better than it should be doing, and so on and so on and so on. And people can go on, investor relations on a Tesla website, print it out, look at it, look at the actual numbers. And that, if that doesn't reassure you, I don't know what we'll do.
God, that's so important, is just looking at the numbers, just diving in. When I started actually creating my own valuation model, and I know it's not the best, but at least once I put that together to understand what's truly going on with the company, I was like, oh, that's why. And and I know a lot of my subscribers on here are all in on Tesla stock, and the majority of them are like, we don't care what's going on right now. I'm going to go sell whatever I can. I'm going to sell my lawnmower. I'm going to go sell grass clippings for whatever I can to scrounge up money to buy more, because they understand the opportunity. There's also some other people on the other side who are very frustrated about this right now, because maybe they don't understand, or they're all in, and that's a personal thing on their end. But this is something that hopefully tonight we can clear some up, and some people who are frustrated maybe kind of get that clarity to understand this. So if you want to jump into some charts to show anybody, go right ahead.
Sure. Okay, let's have a look. So let me see if I can just share my screen on here. So I want this particular window. Here we go. So we'll start
Here
here.
we go.
So,
And HK, yes, don't lose hope. This is what tonight's for, is
no.
to help reassure you not to lose hope.
Okay. So, has that worked? So, oh, there we go. Okay.
Oh yeah, there we go. We're good.
Right. So just start off with we're just going to start off with a tweet first of all. If you can see that. This is Jeremy. He's done very well. A lot of people know him in the Tesla community. Florida man, as many people might call him. And this was a year ago. Now, this was something that I wrote and was quite clear on, in the sense that this was the time when Elon did the poll. If people remember the poll, should I sell 10%? I will abide by this, or whatever.
That was that was my birthday last year. Thanks, Elon. I appreciate this. I appreciate the sales.
Okay, so at that point there was a fundamental change in the company, right? Now there wasn't a fundamental change in products and services, but there was a fundamental change with respect to cash flow, equity, etc. That didn't mean that necessarily, but this is what I did based on what I was trying to achieve. And so when I looked at this on here, on this particular chart here, and this was done on my phone, so apologies, it doesn't look beautiful. What was happening to the stock, going back to what I said, it went vertical. And this at the point, now, love him or hate him, Elon is, I think, the best market timer in the world, right? Okay. And he sold right there. Yeah. So I sold a large proportion of my Tesla shares then, because I had a high probability that, one, it was going vertical, and two, you've got this essentially the CEO also selling a large portion as well. So I thought, well, what's going to happen? Now, this is an important point. For people who've been in this for a number of years, there's nothing wrong with taking something off the table at this point, if your belief is that the stock is going to continue to drop. I'm not going to go into minutiae about whether you should or shouldn't and things like that. That's not necessarily the right thing to do here. But this is important. So this was a year ago that I looked at that one. And then this one here, this is quite an interesting one, I think. Let me just bring this up. Can you see this one here?
Oh yeah, see the tweet. Yeah.
Yeah. Okay. So it's who's buying a Tesla sale. Okay. So this is November here. Now this is interesting. So again, I just squiggled on my phone. Somebody put a chart here, and I think there's some moving averages and so on, whatever. And just a thing on charting, by the way. The best charts are the one with the least number of lines and squiggles all over them. When you see people with 100 squiggles all over them, they usually confuse themselves. So keep it simple, right? I just put a sort of base support line on here, and then this person here put, so fundamental analysis has no purpose. And I wrote, of course, but what has changed fundamentally? Now, this is important, okay? And I put nothing recent. Optimus, full self-driving, margins, growth rate, don't match. Don't match the price, in my opinion. They still don't understand Tesla, aka sale. And I put, I'm not trying to be arrogant here, but this is what I wrote: ignore the charts at your peril. There is an important point here. Every single time I have ignored the charts, I've lost a lot of money. Every single time. Doesn't matter what the company is, okay? And this is, I'm talking about, remember, I'm talking about fairly short-term time horizons here.
Yes.
All right. Okay.
Yeah, and that's important to remember, because as an investor long-term, it truly doesn't matter, but there could be opportunities out there. I swing trade my IRA, so that's why I pay attention to stuff like this too.
Exactly, and that's it. So again, context. Everything I say is within context, and that's important. And this chap put, they can be taken into account, but as you zoom out, fundamental analysis will take precedence over TA every time. I suck at charts. Fair play to this person for saying that, but I still think my statement is right, and is right. Fundamental analysis, absolutely. If you've got a company that does not have all the things that we've talked about what Tesla has over a 20-year period, well, they probably will cease to exist. That's the reality of it. Now, this was what I drew. This was about a month ago. Now, this is not a pretty picture. I'm not doing this to make friends. I'm not always popular. I get that. But I looked at this. Nature abhors a vacuum, and I drew this hole. And lo and behold, where are we? Now, at this point, this was nothing to do with what was going on. From my opinion, this was nothing going on with Twitter or anything like that. What this was really quite simple.
Is that gap down at 137? Because that's one thing I was tracking all this year were the gaps. And I'm like, look, I was like,
Yeah,
again, as a long-term investor, it doesn't matter. But if you're going to be following it in the near term, gaps make a difference.
they make a huge difference. And that was it. And so when I looked at this, let's have a look. So this is a weekly chart of Tesla. Let me take that off. We don't really want to see what I've been up to. I looked at this, and this is what I would call a base support trend line. Now, this coincided with exactly what was going on, and this is a point when I personally exited. Now, I personally did that for my reasons. Doesn't mean anybody else should. But what I look at here, when I look at this overall chart of Tesla, and we'll move away from Tesla in a moment, not really what I'm going to be talking about. I look at this and I go, what do I see? A strong form of resistance somewhere around here. You could make these lines thicker. It's not exact. It never will be. So you're likely to get a lot of noise around here. And then if you are still of the bearish mentality, you could go, well, maybe there as well. But then you could start to say, and I won't draw too many, then you could start to say, and we're on the weekly chart, by the way, here. You could then go all the way out a little bit more, and you could start to say, okay, maybe we start down here. And this is the stuff I think that a lot of people sometimes miss. So then you could start to bring a line up here, and you could start to just join these up, and you could start to say this. Now, where does this put you? 2025. Is it likely that the stock is not going to recover by 2025? No, because we're now into what we call fundamental analysis. That's the thing. Is it probable that it may fall further? Yeah. How much? Don't know, but there's certainly some strong resistance. Where I find this interesting, and this is where it gets important, is let's look at something else. Let's look at Amazon as an example. Okay, so I get that most people are not that interested in Amazon, but nonetheless, it's still important to think about. Where has this gone? Top to bottom here, 55%, right? This is not just Tesla this is happening to. We could look at the same with Meta. Whatever you think of the company, doesn't matter. Let's look at the same thing. From where it was, top to bottom, 76%. Tesla doesn't seem so bad anymore, right? You see, with this. Now, Apple is a bit of a different beast in many respects, but nonetheless, it's still starting to do the same thing. We're still starting to see top-heavy patterns, and this is important. And when you compare this to, let's say, let's just look at overall. Let's just take a graph at S&P. When you start to see this, people go, oh, but the S&P's only dropped this much and so on. Yeah, fair enough. But it's still 20, 25, 26%. That's a huge amount.
Oh, yeah.
Huge.
And then you start looking at betas and you're like, okay, then it starts making more sense.
Yeah. I mean, this is not a logarithmic chart that we're on here. So this is a huge amount here. Now, there is argument here to say, well, where's the low going to be? And, and somebody said, and this is going back to his question, where does the dust settle? And that's a good question. This is obviously not advice. My thought process is probably something that it won't be there, because this is going all the way back to 2007. I think that would be extremely improbable. Bear in mind, I'm still on the weekly chart. And I'm using longer time frames to give perspective. Top of the COVID one, that's looking about 3,500. That to me seems more probable. To answer that person's question about the dust settling, that's probably where I would see it, is something around that. What does that mean for Tesla? It means we're close. That's what it means. That's what it means. So if your plan is to stay in Tesla for a long time, stay in Tesla for a long time. And you can compare this to other indices around the world. This is the SSE, which is Chinese stock market. You have to put this in context. Look at what's happened over the last 15 to 20 years. Chinese stock market, it's gone down in value. And you can do the same with. Let's go back a little bit as well. I'll come off the charts in a second. You look at this as well. It hasn't done anything near. So the really important point that I want to kind of emphasize in this, and I'll come off the screen here, is that Tesla has outperformed the market by masses, absolutely masses. And so to go into this and think, well, it's unlikely to pull back, doesn't make a lot of sense. And what I'm getting at here is markets have cycles. Everything has cycles. The sun comes up well, the sun doesn't, the earth rotates, right? But you get where I'm coming from, right? There are cycles with everything. We sleep each night. We eat at certain times. We go to the toilet at certain times. This is human behavior at its core, right? We reach a certain age, we reproduce. These things might sound a bit off the wall and a bit wacky. People on average maybe remortgage every 7 years or whatever these types of things are, or people might hit retirement age at a certain age, this type of thing. This stuff all plays a part in this behavior, and the charts give you everything. It's giving you an overview of all of the behavior put together.
Oh yeah, and you got to remember that humans created all of this.
Exactly.
So, I mean, it's based on that. Even when we talk about the algorithmic trading, it's the humans that are creating that algorithm.
Exactly.
So
yeah,
everything is derived around us as humans and our behavior. And so, then we start getting into the charts and you start talking about, market manipulation. The market manipulators understand human behavior and how that plays into the market. So they're going to intentionally swing things. And we talk about that on here all the time. Is just that. And you've got to understand that. And you can use it to your advantage if you understand it.
Exactly. And this is the thing. So, depending on how your brokerage works or not, and in the UK, you have to directly purchase the shares. You can't. Market making is slightly different when we buy US shares. But a lot of the US brokerages, particularly the ones that I won't name them, but I think that some of the ones that got very popular during 2020, that money will never actually hit the market. Never. It will simply, the other side of a trade will simply get taken by whatever platform that is, and that's important with respect to liquidity and so on. And you'll have talked all about that sort of stuff, so I'm not going to go into that. You'll be knowledgeable and all that kind of stuff. But the market manipulation is important with short-term fluctuations. So what we've seen today, for example, is what I would describe, and I've seen this repeatedly with pretty much every tech stock, is a liquidation cascade, which is people getting margin call, people panic selling, blah, 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 blah.
We've been talking about that all week. And that's one of the things that we anticipated was coming, where the margin calls, sell orders triggering. Oh, yeah.
Yeah. And it's usually, and again, this is certainly not advice because I'm not always right. But usually there's a pullback. When you get a big fat red candle, particularly on a weekly chart or even on a daily chart, there's usually a strong pullback. So that sort of thing. So if people, if somebody's looking at this going, whoa, this is crazy, I need to get out, maybe just hang fire, remove emotions from it, take logic from it and go, okay, do markets always overreact? And the answer is yeah. And that is a behavioral psychology. A lot of my background is psychology. It's a bit like if you were walking through the woods at night and it was an unfamiliar area and you heard like a really loud twig break or snap or something like that, you're immediately going to get really anxious and worried because you don't know what caused that. It might have been a big bear that's about to maul your face off, or it might have just been, I don't know, some little rat or something, right? But you don't know what that was. And markets behave exactly like that. They do it every single time. And they do it both ways. And that's the thing. So this type of reaction that you're seeing at the moment is typically an overreaction. That's almost exclusively the case.
Oh, yeah. And that's another thing, too, that I talk about is, when we see it, the market is reacting in a certain way, but there's a forced overreaction because of so many people and their behavior doing it. And then you get into the margin calls, then you get into, the sale orders that are triggering and everything. And, and looking at the charts that I follow, and you dive in a lot further than I do, looking at the RSI, something I look at, we're already oversold. Today pushed us even lower. So we're anticipating a bounce off of that. We just partially filled the gap at 137. So just the timing, looking at the charts for, again, just near-term swings, seems like we should be getting a bounce coming back up. Again, that's just near term. Who knows what's going to happen after that? But, these right now are looking at times for me. This is why I started adding heavier. I had my limit set for 140 and I was putting in 25% of my extra cash into it at 140. So I did that today. I don't have a lot of money in the market. So for me, I'm so focused on cash flow coming in that putting in that 25%, I can recoup relatively quickly to dump back in again if we come down further.
Yeah. And I think another point just on the sort of analysis that I do, and it's relevant to what you've just said. As humans, we like round numbers. We've got 5 digits. So numbers that end in tens or fives tend to be numbers where brokers, market makers will know to go for liquidations.
Oh,
areas.
yeah.
So
Because we like it clean. It's just easy to remember.
Yes, but people do that. People put people will put entry orders at 150 or entry sell orders at 150. This type of thing. So you do get this manipulation in a very short term, and that causes huge problems.
Oh yeah, but like you said, you stretch it out over a decade, and guess what? Even if we pull back, we're back down to 60%. We're still way above where we were before. So if you scan out to the next 10 years after this, think about where we're going to be. And that is when we start looking at the fundamentals of the company. And the fundamentals, as long as obviously you still want to pay attention because the fundamentals can collapse for whatever reason.
Absolutely, yeah.
But if we continue following in the fundamental trajectory that we're on, 10 years from now, the prices we're at right now are going to look amazing. And that's one of the things to pay attention to. Again, we don't know when over the next 10 years it's going to pull out of this, based upon what you said, potentially the next 3 years we're coming out, but nobody knows for sure. There's a lot of other factors. Like what other stuff do you see in the macro going on right now here, at least on the US side of things, that are, that could potentially see this turnaround, like the Fed interest rates and everything?
Well, I mean, the US at the moment leads everything. In the UK, we kind of sheepishly follow what you do. If you have if you hike your rates, we'll do the same the next day. Just kind of
that sounds like a good idea.
Yeah, exactly. Whether it's a good idea or not is another matter. But we copy it, and the European Central Bank does exactly the same, which is a lot of people. And this is the thing. So you're likely to see the same in most markets, in Western markets anyway, with these. So, where I drew those 2 lines there and they confluenced around sort of 2025, if you're looking at this over, decades, you've got what, 2 good years of probably, if that was accurate, what I've looked at, which it may or may not be, I don't know. If that was accurate, you've got 2 years to buy into a company that's going to make you generational wealth over the next couple of decades if the fundamentals stay as they are.
Right.
I mean, that's amazing.
Right. And that's, thinking about the fact that, and I was telling Adam before we got on here, how excited I've been getting all day long just thinking about this. Yes, it's very painful for some people to see their portfolio shrinking.
Yeah.
But thinking about the opportunity, the fact that for 2 years, I can bust my butt working and dump money in wisely into the market in all different areas. Could be housing, could be the stock market, lots of different places to be able to build up this wealth right now so that when we do get into a bull market, by the time we hit the next bear market, which usually it cycles around every 10 years, when we get to that next one, I'll be primed and ready to go. I can be like, you know what? I'll sell out. I've got plenty of cash. I have plenty of cash flow generation. I'll put it into a dividend stock. Heck, I'll just ride out this bear market, whatever, no big deal, and then prime myself for the next one. That's what these cycles are all about. And thinking long-term, as a long-term investor, you really need to think long-term. You can't let your emotions be driven by the near term, unless you're going to be excited to take advantage of them, because that's really what it needs to be. Think about Warren Buffett. I mean, obviously the guy owns Coca-Cola for the last, 80 years. And, thinking about the fact that he's clearly gone through some major bear markets since then. Has he sold out? No. The guy held on to it and it just keeps on going up in price. The same could potentially be holding true with Tesla based upon the fundamentals. So there's nothing as of right now that would lead me to believe that selling right now would do me any good for a long-term hold.
I completely agree. The only scenario where it might make sense to do so is if you bought Tesla prior to the current price, which is June 2020, and you saw a better opportunity, and you also had high conviction that the price was going to drop further. Now, both of those things are risky to do.
Right.
to say the least, right? But it's important to understand this, and this is where context again is crucial, is that if you did buy into Tesla prior to June 2020, you're still in profit. You just okay. You didn't time it and get out at the right time and get back in at the right time. But you know what? Who did? Right? Very, very few people. And there's an important point from this, is that if this is affecting you emotionally, then you have to consider the points. Are you overexposed? So if you're all in on Tesla and you're in a profit to some extent, or maybe you haven't lost that much, maybe, and this might go against the grain of what you might typically say, but I think it's useful to say, is maybe reduce your exposure. Maybe do that so it's less emotional, so that you don't worry about it. It is important. If you're sat on a margin scenario, maybe consider what you need to do to get out of that. Do you need to add funds, or do you need to maybe sell something off? What is your situation, so that you can take opportunity over the next 2 years? Or, as Tim was alluding at, and I'm in a similar situation, which is, look at other streams of income that you can be using. For me, if I was all in on Tesla at the moment, I wouldn't care. I wouldn't care. I couldn't give a crap about the actual price action of it, for the reason that I've got money coming in from other areas, from my businesses. But if you went into this thinking it's always going to go up, that's not the view of long-term investing. Long-term investing means generational means every 30 years, and that is often not defined properly. I think
that's a good point. I've never put an actual time frame on generational, so 30 years does make a lot of sense.
How often we typically reproduce? Every 30 years.
Very true.
That is the
Oh, we lost you. Hold on, your volume went. You guys, let me see here. You must have muted yourself.
Oh, I don't know if I muted myself or if you muted me.
Yeah, you muted yourself. So excited there. There was secret information, top secret.
Oh,
we can hear you now.
Oh, that's strange. Why that dropped off? Oh, hold on. No, that should be right. Yeah.
Can you hear me?
Can you hear me okay? You can. Okay, I can't hear you. That's
all right.
Strange. Why is that?
Did you mute your speakers?
That's strange. I'm going to pull you up on my phone so I've got it, so we can keep going. I do apologize. I don't know why it said that. I've just looked at my settings. They're all as they should be. Okay. It's really strange.
Dan getting into 2021. Yeah, and actually when Adam gets himself back up and running here,
that's not what I want. I do apologize. I'm so sorry.
That's okay. Yeah, and we'll talk about this when he gets back on here, is for the people who bought in, obviously,
right.
during.
I'm sorry.
That's right. You got us now?
And we'll talk about this when he gets back on here, is for the people who bought in, obviously, during.
I'm sorry. Can I rejoin? Can I do that?
Maybe, I don't know.
Let me rejoin.
Technical difficulties. Got the joys of live streams. Yeah, and if there's anything you guys want to ask Adam, feel free to drop it in the comments, and we will discuss.
Right.
We're good now?
Yes.
All right.
I'm so sorry. I don't know. It just
happens.
Came up with a message saying I was muted and I hadn't clicked anything.
like I told him, sometimes the joys of live stream, it happens.
I'm so sorry.
No, that's okay. So yeah, and going back to your point before about generational wealth being 30 years, like Dan here got in October of 2021, that was literally at the peak. So looking at that again, you've got options. Again, none of this is financial advice. So decisions are, well, if you think it's going to come down further, do you cut your losses and buy in lower, or do you just suck it up in dollar cost average? I bought in, when was it? December of 2020. So it was just after the S&P inclusion. So I was catching it on the way up. I'm definitely negative. I'm down 43%, but I've been dollar cost averaging along the way, bringing my cost basis down. And again, my strategy, and Adam, I know you haven't followed me, but my strategy has been, I put in, a little bit every single day. I put in $25 a day, but I also hoard cash. And once I get to over 10% cash, I'll add a little bit more if we dip further. And then I set those levels, like 140 was my level because I knew the gap was right around there. And I'm like, all right, so I'll drop in 25% of my cash. It was going to be 50%, but seeing the charts moving today, I was like, let me go with 25 in case we dip further. And this way I can keep bringing my cost basis down, because the only time you're going to guarantee a loss is if you sell. And if you do truly feel that the company fundamentally going forward is going to rebound and be fine, there's nothing wrong with, dollar cost averaging. Problem we see with people who do that when they're dollar cost averaging is they get into a stock, which is really truly a momentum play, and they think that they're going to be doing well long-term, and they don't actually do the due diligence on the fundamentals of a company. And then they screw themselves. You look at the GameStops and the AMCs and all that.
Exactly. And people will hold these
exactly
stocks.
You hold hoping for the best, and then that's just pure hopium trying to get you through that.
Well, again, going back to the point that I made, I physically went and visited the Tesla HQ when it was really not very much, right, in 2015. Now, I went to the cinema, or as you would call a theatre, maybe theatre here is slightly different. That's like amateur dramatics and that type of thing. Right?
Yeah, we kind of call it both.
Okay, cool. Well, you're East Coast, so you're a bit more European. But I took my son, must be 3-4 months ago. I've got a little Sonic thing on the wall here, right? I took him to go and see Sonic the Hedgehog movie. And we were the only people in there. Now, that's Peter Lynch style investing. For people who are not aware of that, that's boots on the ground, go and see what's going on. Now, that was Cineworld, which I think are owned by Regal, which is a huge company.
Yeah.
Globally. Now, I looked at that. Now, the fundamentals have changed. The fundamentals have changed significantly. People don't really go to the movies very much now. Why? We know the reasons, and we're not going to go into it in depth, but it's just much easier to watch stuff at home now, and big TVs are cheap and so on, and this type of thing. And you've got all these sorts of scenarios happening here. So, 20 years ago, would I have bought what the publicly traded stock here, which is Cineworld? Would I have bought it? Yeah, probably. I would have looked at it and gone, yeah, it's packed all the time. People are going, people are spending money. There's lots of big names coming out and so on. Now, would I buy it? No, the fundamentals have changed. And this is as relevant to Tesla as any other company. If the fundamentals change, then you need to reinterrogate the data set upon which you bought into that stock. So, for example, if and we can come on to the elephant in the room, perhaps talk about China if you haven't already. If there were significant problems with China, if, I don't know, Elon, I was going to say went crazy on Twitter, but I think that kind of
already been there doing that.
We did that already. But no, I don't think that's had significant influence. It's had some influence, but who knows how much. In terms of fundamentals, not really. But if he steps back, okay, fine. But again, it's noise. It's not a signal, that's noise. Is the company still producing lots of vehicles? Yes. Is the energy sector still growing, et cetera, et cetera, et cetera? Yeah. If there's a radical change, e.g. regulation says that solar becomes illegal, for example, something absurd happens like that, then it's worth having a conversation about it. And that's the sort of conversation you have to have with yourself.
Yeah. And that's actually something, looking at on the reverse side of things, looking at those fundamentals, all the regulations in the future are everything has to be EVs. So that is playing as a fundamental thing in the future in Tesla's favor. So, if that doesn't change over the next decade, that's a huge tailwind that we could be seeing.
Massive. You look at ESG stuff, whether you agree with it or not. You look at World Economic Forum stuff, whether you agree with it or not. It's huge with respect to a tailwind to a company such as Tesla, which is electric vehicles, energy generation, energy storage, artificial intelligence. All of these things converging are still there from respect to fundamentals. So what this is saying is it's okay to be bearish short term on the stock and possibly medium term, but you can still be incredibly bullish on the company. I certainly am. Yeah. From everything that I'm looking at, and when I look at those quarterly reports, and and bear in mind, there'll be people that will try to trade around earnings and stuff like that. I've done that type of thing in the past, and it usually doesn't end well. Right?
I think the success rate is very low on that.
Yeah. That said, when Snap came out, I know it's a different model completely, but that was the canary in the coal mine for the big tech earnings for sure.
Yes.
But they rely on advertising. It's a different model. But nonetheless, a point on that is, when these reports come out, they are scanned by a computer that will read the whole document in under a thousandth of a second or something like that. But you can't do that. You need to sit down and go, right, I don't understand what these numbers mean. Now, there are people that will put significant amount of money into Tesla, even if, let's say a dollar cost averaging, let's say they're doing what you're doing. Now, if that's me and I'm going to be doing that, and I'm going to be doing it every day, I would be printing off, as in physically printing off, the last year, as a minimum, of the annual reports from the investor relations site. You used to have to phone up and get this stuff. Like this, honestly, you used to have to phone up and request it from the company. Now it's online. It's incredibly easy. And go through the numbers. And if you don't understand it, go and pay somebody who does understand it. If it costs you a couple $100 to do, it's well worth doing. This is the stuff that gives you the confidence to ride through these types of scenarios. That you go, hold on a minute, actually. No, this is actually a really good company here. This actually is on sale, rather than just reading a tweet, Tesla's on sale.
Right.
That deep understanding is so important. I don't want to labor the point, but I think it is great. It is important.
Oh, yeah. And that's one of the things, like for me, I've been a retail manager for the last 15 years. So I get our P&L reports. So I'm very familiar with understanding the financials and fundamentals of a company. So going through the reports I see from Tesla, I'm like, oh, dang. I was like, that's why for me, the more I started diving into it, once I built up my own valuation model, and I'm more on what I consider the conservative side of things, I'm like, even on the conservative side, the return on my investment is going to be crazy. So, even I was one, and I was guilty of saying, hey, you know what? I think the stock under $1,000 pre-split was an awesome price. But that's because I was thinking out the trajectory of the company 10 years down the road.
Right.
And so I'm like, 10 years down the road, the stock price under 1,000 is a good buy. Obviously, right now, it's a significantly better buy. But if you're looking out 10 years, that still is going to be a good price, and you'll have a decent return on that investment.
Yeah. And this is it. And it's all, everything comes down to a risk reward ratio with this type of stuff. And there was a tweet, and I think it is worth mentioning, where Elon was saying that people, this was this evening, saying that, as interest rates rise, people move to cash for safety and so on. He's right, but we see this in every single bear market.
Yeah.
Interestingly, we see it usually, and again, it's not always true, but we usually see it towards the end of a bear market. But it's usually part of a bottoming pattern, which is great.
Yeah,
so that's just from my analysis of looking at it. So I look at that from top to bottom. I look at the indices, and the indices are important. Individual stocks are really important, but it's also very important to look at the macro picture. Super important to look at that.
Oh yeah, and that's when some things that now in this day and age with computers, some people don't understand. There's so many people who look at different areas and different charts, and they'll look at the MA, the 200 MA. They're going to look at the RSI. They're going to look at charts. They're going to look at fundamentals. They're going to look at the macro. They're going to look at the indices. Computers are looking at all of this simultaneously.
Exactly.
And that's something that one human really can't do, and they definitely cannot do in the speed that a computer is going to do it. So us trying to compete with computers is nearly impossible.
Yeah, and that doesn't work. I mean, you will see people that will try and create bots and trading bots and all this type of stuff and all that sort of thing, and you'll get people that will day trade, and 99% of people will lose money doing that sort of thing for sure. But I think from my side, from looking at the charts, and again, I will reiterate the point: whenever I have ignored charts, I've lost money. Okay, as a trader being up to 6 months, and I'm typically a trend trader. So that's and so for me, it doesn't matter which way the market's moving as long as it's moving. At the moment, it's actually not really moving that much. There's actually a lot of what you might call non-directional volatility at the moment. And so actually, this is actually probably quite a good time to actually start looking at Tesla and going, this probably isn't a good time to be selling. This is actually probably quite a good time to be thinking about picking up more here.
Well, thinking about Chicken Genius, everybody gave him crap for calling 140. And look, he bought in a little bit, 5% at 150. He bought a little bit more today at 140.
Oh, Ken, the chap from
Yeah.
Exactly. So he's a great example. Somebody who has a lot of experience in markets, a lot of experience with options, which is basically stock on crack. But it's a good way to understand.
To multiply your wealth quickly is risk reward, like you said. But if you know it well, you could magnify your wealth quickly.
Yeah, or go bankrupt.
Yes, definitely.
Options trading is interesting. It's not something I've never got involved with.
You can gain or lose money extremely fast.
Absolutely. But you're right. What has he seen? Now, his technical analysis will be different to mine, but there'll be similarities, and there'll be more similarities and differences. And he'll be seeing the same sorts of things that I am, which moves on to perhaps maybe talking about, at some point, the Federal Reserve will pivot. Now, it's been said, I can't remember the exact phrase to paraphrase it, but it was something like, we've got tools.
Yes.
Right.
We've got the tools to make this happen. And I remember somebody had tweeted and said, you have one tool, interest rates. It's literally all you have.
Exactly. All they can do is control currency expansion or contraction or interest rates. They've got two levers, basically, and that's it. So, we're now looking at it, and it might actually be worth if I was to bring that up, actually, it's maybe a chart, and this is maybe something I think it could be something useful, actually, for people to actually look at. If you don't mind, Tim, if I share my screen just once more.
Yeah.
I think this is just maybe a useful thing just for people to understand. Again, this is a macro gig, so this is what I want to talk about it. So just looking at this for a second. So this is US M2. So this is basically how much money is sloshing around the US economy. And this goes back to 1959, so just after World War II. And as we can see, it's gone up and up and up. And the stock market has done exactly the same thing. But if we start to, and I'm on the weekly chart, but if I start to bring it down to a daily chart, if I start to, I don't think it's updated daily anyway, but if I start to look at this, we're now in a period here of currency contraction, meaning there is less money moving around overall. Now, this is something which is extremely rare, and I can't find another example of it. So this is nothing to do with Tesla whatsoever. Nothing to do with Tesla. That is to do with the Federal Reserve. Nothing. And Elon has tweeted this several times. We don't control what the Federal Reserve do. So the concept of this, for people who are not familiar, and you can explain it better if you like, is trickle-down economics. Fed prints lots of money. Money goes into the currency supply at a low interest rate. Companies will either buy up their own stock or they'll take loans at very low interest rates, or in some cases negative rates. We saw that throughout 2020. That's what caused this huge scenario that we're in now. Now the Fed are going, we're going to put the brakes on, but they haven't said when. And that's the scenario we're in.
And the timing of it, and just listening to what Jerome Powell has said all year.
Yeah,
he's basically been saying the same thing, just with a different stance depending on whether they wanted the market to go up or down, or whatever it was.
Yeah.
But basically said, they're going to go up. They've said that the 5.1% is what they're going to be looking at. So I'm anticipating a 25 or 50 basis point hike on.
What are we now? Is it 4.5? The US base rate? Is that?
It's around 4.5 right now. So we're looking at a 25 or a 50 basis point hike coming one more time. And then after that, probably a pause. And he said that they're going to pause and hold high interest rates for all of next year. So we're realistically not looking at a pivot coming unless inflation data comes in surprising us in the downward direction. I'm not anticipating a pivot coming until end of 2023 or early 2024 at the earliest.
No. And another chart, I won't share the screen and bore you with it, but another chart that's useful for people to look at is U6, which is the unemployment one as well. Now, with respect to unemployment, whether it's accurate or not, I'm not here to say. But that's also important as well to look at. That may be something that influences a decision as well. So the takeaways here are that, yes, all right, we might go, okay, Elon's caused a bit of a storm online or whatever, and that may have affected some of the short-term price action. But there's a lot bigger stuff at play going on here that's affected everything. We just looked at Meta, down, what was it, 75, 80%. Amazon, what was that, down 70, 80%, right? Tesla's actually doing all right.
Oh,
It's
yeah.
pretty good.
Well, and going back to the M2, I've talked about it before
Yeah.
also, is when you have less money in the economy to invest, which got to come from somewhere.
Right.
So the first place it's going to come from in a rising interest rate environment are high PE stocks. That's where
Exactly.
the compression comes from. You're
Exactly.
basically like squeezing the orange. You squeeze it down, that juice is coming out. There's all the money that's going back into the Fed. Eventually get back to the point where we do have that velocity turn back around, but the velocity of money right now is not in our favor.
Well, it's almost lying face down in the water at the moment. I mean, it's approaching 1 when you look at currency velocity. It's not pretty.
Yeah.
So there's going to have to be something to stimulate that. Now, whether that's going to be currency inflation again, I'm saying currency inflation, not monetary inflation, and
Yeah.
There's obviously a difference between those two. When that happens, that is when you're going to see prices of assets, particularly companies such as Tesla, absolutely rocket. I can't be 100% sure on that. Nobody can, but it's highly probable based on everything that we've just seen happen.
Right. And then looking at, and I'm sure you're familiar with Alexandra, Tesla Boomer Mama, we've been talking about the credit ratings for Tesla. So
Yeah.
right now they've got investment grade rating from S&P. Moody's should be coming up very soon. Thinking about the fact that we're coming into a time frame where it is prime pickings for purchasing and buying for long-term wealth, and they're going to have a bunch of big money investors and institutions coming in because they didn't do it before because Tesla wasn't investment grade, that could end up pushing it even higher, stronger, just because there's a lot of big money that's been waiting to get in, and they're going to have a prime opportunity for it.
Absolutely, and that's it. And one other point that I will make, I think it's good to have a peripheral vision of lots of things that are going on in this type of sector as well. Tesla is essentially a technology company. I think it is a good way of just defining the overall ecosystem. And they have exposure to crypto. They have a significant exposure to crypto. Now, we've just seen what happened with a couple of exchanges. Now, Binance might be next. Who knows? I don't know. Binance is not so big in the US, but it's certainly big all over the rest of the world.
I was hearing something about Grayscale too.
Right. So you've got Grayscale as well. You've got you've got DCG Group. You've got all these things, Gemini, whatever. If all of these exchanges go pop, whether they're caused by, let's not speculate on what causes these things to go pop, but regardless, if there's regulation enforced in that marketplace, that also is something which is also very bullish on Tesla, because Tesla does have exposure. Now, people could argue, it's not a huge amount, and they took a big loss, and so on and so on. But you have to look again at the track record of the person who is running a company. And you look at Elon, what's his background, and so on and so on and so on. They're very clever with the way that they use their cash and the amount of free floating capital at the moment. So if there is a scenario in 2023, which is highly probable, that there is regulation established for crypto, that's going to push the prices up. There's no two ways, because all these institutions are going to flood in and go, and suddenly the independent financial advisor, or whatever you might call that person in the States, probably the same, is going to be able to go, hey, we can now offer you an ETF which contains XYZ amount of Ethereum and Bitcoin and so on. And I'm not talking, I'm not here to talk about Bitcoin or anything like that. But the point is, Tesla has exposure to these and has shown in the past repeated hints at taking payments with these types of things as well.
Oh, yeah. I mean, think of it, Dogecoin. They take Doge for a lot of stuff, and we know that Elon's most likely going to use it over on Twitter. So
yeah, so these things are relevant, and they're relevant because in developing markets, it's not always easy to play around with cash. So in the States, sure, you can buy a car, you can buy you can literally pick up your phone and you can order the car. But in certain countries in the world, you can't do that at the moment. There are certain countries. I think Nigeria is a good example. Now, Nigeria has a population, I think, don't quote me on this, I think of 200 million people. It is a huge country and is becoming more and more wealthy all the time. But you cannot transfer, I think, more than the equivalent of $2,000 US, I think, without government approval or something like that. It's both wonderful and also terrifying in many ways. But there are certain reasons for it and whatever and so on. But crypto, you can. Now, at the moment, if you went to Nigeria and you tried to buy a Tesla, you'd have a problem. You've got a difficult problem. You're going to send like 40 tranches of the money over to try and do it, right? And this happens in certain territories. You do see this. So I think all of these things are incredibly bullish overall, and you'll see the same with MicroStrategy, another company that are doing have a similar type of ethos around this. Again, look at somebody like Michael Saylor. Look at his time horizon. Is he worried at the moment about the price of Bitcoin? No. But where are we with respect to the price of what's happened to Bitcoin in respect of Tesla? It's probably not that dissimilar. I haven't looked. I'm not going to bring up a chart on it, but it's probably both 60-70% down over the last year.
Yeah.
But is he concerned? No, because he's looking at the fundamentals. Now, I'm not going to argue the fundamentals of crypto. That's not a point to do this here. That's different. But what I am saying is, if you've done your research, you wouldn't be concerned. And he's done his research clearly, and that's the point I'm making.
Yeah, and that's one of the things that a lot of people are concerned about is, and again, not diving into crypto, but looking at the regulations. People are like, oh, if they regulate crypto, it's going to be bad. And you're like, no, you've got to look at it on a broader scale. There's a lot of big money out there. Sure, for the retail investor, they don't want it. But when it comes to the retail investor, they want big money to come in and buy the thing up because that's going to push up the value of theirs as well. So realistic regulation is good for it in the long term. And that's why you got to look at it the long term. Same thing with Tesla. You look at the different regulations that are coming out. Elon's mindset from the beginning has been like almost infinite. Like just say, hey, this is the goal that we're going to hit sometime in the future. This is what we're going for. And it wasn't, hey, we're going to get there in 2022. It's we're going to get there decades down the road. And that's what the mindset is.
I think that's a really important point that you've made there. Is when you look at people think disruptive innovation is cool, or it's sexy, or it's fun, or it's easy. It's the opposite of those types of things.
It sucks.
Right? Yeah, it sucks. You're going to get attacked. You're going to get hated. You're trying to change regulation. All these types of things are big, big problems. And it takes time. And it takes time that is also beyond the control of that company, which is difficult. But eventually it happens. And when you look at any of these types of people, whether it's Elon, whether it's Steve Jobs, it doesn't matter. The bottom line is, I mean, love me or hate me, I've got the iPhone, right? Okay. Now, I used to have a BlackBerry. Now,
so did I.
Right. Now, what happened to that company? Whatever, Research in Motion or whatever they were, right? I think they still exist. I think you can still buy the stock.
You can. Yeah.
Right. Yeah. But their time horizon was short-sighted. It was more myopic about, hey, how quickly can we make this phone that's got the keyboard on or whatever. I'm not trying to be unprofessional here. I'm saying that their vision was different and shorter, and they didn't take as big a swing of a hit. Now we talk about these, we don't even call them smartphones anymore. We call them smart devices. But you look at this, look what Apple stock did for decades, right? And you look at where Tesla is now. If you were to, I mean, people can do this for themselves. Go on TradingView, transpose a chart of Tesla now where Amazon was back in 2001, and it will give. And I'm certainly not saying it's a prediction, but it could give you an indication of where it's going, and that is a very interesting scenario.
Oh yeah,
and it's not a ridiculous comparison. It really isn't. When you look at things such as energy crisis problems, decentralization of energy in particular, it's a huge deal. Not just in developing countries, but in developed world as well. There are huge concerns around energy usage, huge concerns. So there are so many facets of this that are not really being looked at fully. And I think to focus on the stock price alone is not a good way of looking at Tesla as a company. It really isn't.
That's one of the things that I've learned myself, and I've been teaching my son as well, is if you're going into something to make money, you're probably not going to make money. If you're going into something for a purpose and for a mission, like Elon did with Tesla, that's where you're going to garner wealth. That's why he became, and not anymore, but was the wealthiest man in the world, because he wasn't in it for the money. He was in it to drive the world forward towards renewable energy. And so upon that mission, he became the wealthiest man in the world. Same with your portfolio. If you're in it for the reasons on a fundamental basis, those fundamentals will end up taking you there.
Yeah.
But, unless you're a swing trader like yourself and you are in it for the money at that point, then yeah, you do some other research on things and you make it in different ways. But, even for you as a swing trader, you still pay attention to fundamentals, right?
Well,
I mean, as long as making sure the company is not going to be falling
well,
apart. Obviously, there's different reasons you get into different stocks.
yeah. It depends. I mean, to be very frank with you, for transparency, I don't get involved with stocks at all.
Oh, okay.
At this point. And what I mean by that is because to do that, to be a trend trader, I've got to short stocks, which I don't like doing. There's too much manipulation going on. People say, I'm going to use the word crypto again. People say technical analysis doesn't work on crypto. I can tell you you're wrong. It absolutely works on crypto. And I'll do it on that. And I'll use a platform such as Bybit, which is a platform where basically you put collateral up, which is usually USDT. And so you never actually affect the price at all. That's what I do. So I wouldn't
Okay.
actually actively get involved with shorting a company as such. That's not the way that I would play the particular game. And it is a game, and it comes down to that risk to reward ratio. Now, for me, based on my goals, my age that I am at the moment, so on the amount of sheer money that I've lost over the years, and to try to recoup it as well, but also the way that because my businesses provide me a cash flow, I can afford to take bigger swings at certain things than perhaps some other people can. I'm still a nobody, but that's not what I'm getting at. What I'm getting at is that your point here is that you have to operate on the company's timeline, and the company's timeline it does not say transitioning the world to sustainable energy by 2025. It doesn't say that.
Right.
It's open-ended. So there was somebody who came up, I think his name was Dan, who commented, and he said, he put, I bought in October 21, and and he was like, the kind of like, rolling on floor laughing emoji, right? Now, if Dan's 21 years old, right? I don't know who Dan is. I have no idea. I'm just creating this avatar in my head, and he bought then, and he doesn't sell it for the next 20 years. Dan's going to do very well, very, very well for himself.
Oh yeah.
Extremely well for himself. And you could see that you could say the same. I'm going to use it again as a comparison. You could say the same with Bitcoin. If you bought every single high in the previous 3 bull markets, you'd have made a huge sum of money,
Yeah.
And that's where it's useful to start to keep these things in context. Now,
Right.
at the moment, people are in pain. People are going, oh my God, the stock price is crashing. There's a problem here, and so on and so on. I don't look at it like that.
And here you go. Dan is 20, almost perfect.
Boom. Right. There you go.
I love it.
Right. I would do anything to be in Dan's situation right now. Anything. I'm not 20. I can't be 20 ever again. Right. So if I was in Dan's situation, I would be filling my boots with Tesla. Every single opportunity I could do right now, knowing that in 20 years' time, you would be set, absolutely set. And that's the thing. Unless, and again, I must reiterate this, unless something fundamental changes within either the company or regulations, meaning that the company cannot do certain things. I don't know, maybe they banned electric vehicles in the United States for some reason or so. Extremely improbable, but nonetheless, still worth considering. What would need to change for me to exit this position? It's important.
Right.
So,
and this is one of the things why, for my son, I'm adding to his account. He's turning 16 next week. And I think same as you, I'm like, I can't be 20 again, but my son can be, and my son is. So what can I do to set him up in these situations? And I can teach him about these things. I can set up his account. I mean, I'm 43, so I know I still have it, hopefully at least 40 more years to go. That's a ton of time for me to turn around for myself. Even in these situations now, I can still have plenty of time to build that up. Sure, I wish I started 20 years sooner, but you got to start somewhere, and I'm doing it now.
Well, going back to Dan's situation, so I was, I don't know if Dan caught what I said at the start, and he may well have done. I was 20, living in the States, bought Amazon at $1.53, and it went down to whatever it was, 43 cents or something. And, when I bought Amazon at the time, I was like, I'm the man. I'm 20 years old. I'm invested in the stock market here. Look at me. and then this price, and then .com thing, and I was like, oh man, what do I do? Now here's the thing, I sold it. I sold Amazon, right? This was $1,000 worth of Amazon at $1.53. It was back then. I sold it. I moved back to the UK. All right. I met a girl and I got a job, and I sold it because I was like, whatever, I don't know what I'm doing, and I sold it. If I'd held that, and I'm 43 as well, I'd be sat on quite. And I think Amazon paid dividends as well. I would have been yeah. So there are lessons in all of these things, huge lessons, and I think that's crucially important. So.
Oh yeah. And
Yeah.
actually, and this is one thing up here that Karav, and he jumped off, and so Karav is awesome. He's a guy who does a lot of numbers on the back end for production. And he's a kid. He's 15 years old, brilliant kid. And and right here he's saying it's okay to be wrong. It's not okay to stay wrong. If you make a mistake, dump it. Own up to that mistake, fix it, change it, whatever you got to do. And one of the reasons, and going to a fundamental thesis on Tesla, it's not just looking at the numbers. Let's look at the leadership. Elon's mentality is, I'm going to go out there and try a whole lot of different things because I'm going to learn from my mistakes very quickly. That's why the company can move faster than everyone else. I've told the story on here. I don't know if you've ever heard the story of this pottery teacher. And he has his class, and he separates them into two groups. One group, he says, I want you guys to make the perfect pot. The other group, I just want you to make as many pots as you possibly can. Sets them all off. And the group that's supposed to make the perfect pot takes a whole semester trying to figure out what is the perfect pot. By the end of the semester, they've just made this mush of clay, and they haven't gotten anything. They didn't even make one pot. Meanwhile, the other group, failed a bunch of times at first. The first few pots didn't come out all that great. But by the end, they were producing the perfect pot over and over and over again because they learned from their mistakes. This is how Tesla operates. This is another main reason why I love the company, because if they make a mistake, they can adjust quickly and fix it.
Yeah, and this rapid iteration, again, is another thing that people should be taking care of. So, again, this is the type of thing, this is the sort of thing that I do. I don't do it with everything, but this is stuff that's underrated. Pen and paper, write down all the things that make sense about buying a company, because you are buying a piece of the company, and the things that don't make sense. Write down your situation, work it all out, and then look at the macro situation as well, and look at it and go, for example, this scenario in Ukraine, is it likely to end soon? Well, the answer is no. It's likely to rattle on for a good couple of years, I would expect. History has just taught us these things. Yeah, and that's just. I'm not saying recent history. I'm talking about history going back to, probably, I don't know, 5th century, really, from when we've had these sorts of things occurring. So, this type of environment that we're set up in the moment, where you're starting to see things such as price to earnings compressions and things like that, and so on, and you can get as technical as you like about it, but it doesn't really matter. Just use a simple language. It's on sale, but it's only on sale if you are looking at this from a long-term perspective. If you're looking at buying this now and selling it in January, there's a high probability you're not going to make any money. You might do, you might not.
Yeah.
But that's not investing. And I think I think we've been desensitized to that certainly from the meme stuff that's happened, but also from the huge amount of currency that's been pushed into the system. And I think, and now we're seeing the ramifications of that, and people are going, "Oh my God, it's negative. This is all a negative situation." No, this is not. This is where the generational wealth is made.
Yeah,
this is where you start dollar cost averaging into great companies. This is where you have the fun.
Oh yeah. Exactly. And and going right back to the beginning, that's exactly it. Is if you're looking for generational wealth, Warren Buffett, be fearful when others are greedy when others are fearful. And right now, people are dumping the stock like crazy. People are getting margin called. Sell orders are going through because people don't want to lose any more money. Well, guess what? Those are the times where you have that opportunity. Now, like Adam said, sure, the stock can come down further. We don't know where the bottom actually is. But if you're taking a snapshot of smaller areas, if you take a 1-year snapshot of this year, every stock, the entire stock market looks like it's coming to an end. But if you scan out 10 years, the stock market's still way up. So you just got to, open up your horizon for what you're actually looking at. And for most of you guys on here, you are long-term investors. So when you're getting discouraged, open up that chart, look at it on a 10-year basis. Tesla is still significantly up. And if you want to say, all right, well, let me look at history. I'm a history major. One of the things I learned is history repeats itself. So like Adam said, look at Amazon, look at Apple, look at the FANG stocks, what they did over the last 10 years. Tesla is most likely going to do that over the next 10 years. So would you want to go back to 2008 and buy Amazon and Apple? I'm guessing you'd probably say yes. So right now we're looking at that opportunity, in my opinion. None of this is financial advice, but in my opinion, like this is that opportunity that we're getting. We've been talking about it all year. This is it.
Well, and I would add to it that this Twitter scenario with Elon buying Twitter, whether people agree with it or not. Now, if he's doing this to try to be impartial, and we've got these things, the Twitter files, etc., which I think is actually extremely important. I really do. I think it's incredibly important that these things come out and they're transparent. Massively important. Now, some people are getting annoyed and getting detracted from that type of thing and so on. What he's doing is super important overall, with respect to things such as democracy, free speech, etc., freedom of expression, these types of things. There are lots of countries in the world where you cannot do these things. You can't even do what we're doing right now without being censored. It's extremely important. Now, there's two ways of looking at this. One is going, oh my God, that's not important. The share price is really, really important. And the share price is down. Or the other one is going, hold on a minute, this free speech thing that he's doing is really, really important. Oh my God, the share price is down. Well, there's the same outcome. Either way, you're getting cheaper Tesla stock if you want to go and buy it. So it actually doesn't matter that much. And I think this is where this signal really needs to be focused on over the noise. Go and pay attention to the noise if you like. That's fine. And I think it is important, a lot of the stuff that he's doing. But from an Elon timescale, if it takes him 2 years to sort out the Twitter scenario and so on, so be it. You've got 2 years to go and increase the amount of cash that you've got coming in, whatever that is, whether that's getting promotion, getting another job, starting a business, side hustle, doesn't matter. Whatever you've got more opportunity to do that. Imagine the reverse happened and we saw a crazy, just like the COVID crash was the fastest and deepest crash we've ever seen, right? I mean, it was phenomenal what happened there. And who caught the bottom on 24th of March, 2020? I didn't, right?
Yeah.
Right. But imagine if that happened now with Tesla and you saw that type of reversal. Most people would hate that. Most people would hate it. People would go, actually, I love it. No, they wouldn't. Because there's nothing, the one thing that's worse, and I think most people would agree with this consensus, losing money, it sucks when you look at your portfolio just in terms of, on paper. But the worst thing is when you miss opportunities. If it back up to 1100 and you had cash sat there, that would annoy you a lot more, I think.
Oh yeah, the amount of conversations I have had with people about, like, even myself, I say it, like, gosh, like when I started my current job right now, it was back in 2014, and a guy drove in with his Model S, and I'm like, dude, that car is sweet. I didn't know about investing at the time. I didn't know anything about this, but like, obviously looking back, I'm like, I wish I knew about investing. I would have totally dumped money in then, and right now, if I had done so, I would not be working right now. That's the whole scenario. And I didn't. And there's so many people I've had conversations with. I wish I bought back in sooner. I wish I bought back in 2012. I wish I bought back during the whole entire 2018 saga that was going on with the Model 3. Like, all of these opportunities that everybody was like, in that moment was the absolute worst moment ever in the company's history. That was the moment you wanted to buy. Yeah. And we're going through another one of those moments right now. And personally, I think it's foolish for people to think that we're not going to come out of this. And that's my take on it is, as a long-term investor, if you think that we are not going to come out of this and Tesla's going to be completely done because of the noise and things that are going on right now, I personally think that this is going to be that scenario where you're going to want to be in.
Yeah, the noise for me is a great thing. You've got positives. You've got a lower share price, giving you opportunity to purchase. And two, you've got Elon doing something else, which is great, in my opinion. I think it's brilliant. So I look at it and go, what are the negatives here? Well, the negatives here are if you are emotional about the price of your portfolio, and it sucks. But this is what bear markets are about. This is the reality of it. You do see liquidation cascades, you do see margin calls, and they are always a result of inexperience through overexposure, greed, and so on and so on. And most of us will get burnt at some point in some way or another. And that's the nature of it. And this is where it's about being sensible. You just have to be a little bit more sensible sometimes and just go, whoa, something's just gone up 10x in the last, year and a half. Is it going to continue to 10x in the next year and a half? What's the probability of that? I've never seen anything 10x again, ever.
Yeah. And now that it's pulled back down, now there is a probability that it could 10x, not in the next year, but now that the further down we pull, the higher the probability is that we 10x in a narrower time frame. And again, that's how it works when the stock is pulling down.
But the beautiful thing about this is the great thing about this, is it's not to do with Tesla. It's not to do with the company. It's macro.
Yeah.
And this is the great thing, is in these when these macro scenarios happen, but the company fundamentals stay the same or improve, that increases the bargain. That increases it.
Oh yeah.
That's the great thing. If the share price was down dramatically because they simply weren't selling the cars, or the cars were a huge problem, or the solar roofs were, I don't know, doing something terrible, or whatever, or the mega packs were a huge problem, whatever it might be, or I don't know, Optimus had gone off and killed a bunch of people, or some crazy stuff had happened, right? And everyone and the whole board of directors had quit or something like that, and all, I mean, you do see this type of thing with certain tech companies that IPO. But the day they IPO, the entire C-suite sell all their shares. You do see that stuff happening.
Oh yeah.
Right, and it happens a lot, but that's not the case with Tesla. Quite the opposite, really. Elon might have sold some of it, but you still have to look at how much he does own of Tesla.
He's got 13.5% still. I mean, he's got a ton. 423 million shares.
It's huge, and this again, that's a huge amount for somebody to own of such a large company. It's enormous. I mean, what's the next closest? Probably, I don't know, Vanguard, BlackRock. I don't know. It's going to be.
Yeah, I think it was one of those two, because I just saw the chart the other day.
Yeah,
and even them, I think they're like a 6.8% is the next one, less than half of where Elon's at.
Exactly, and this is it. So when people are getting frustrated or annoyed, oh my gosh, he's selling some of the shares and so on, this type of thing. It's overall in the grand scheme of things, it's negligible. It really is. It's negligible. And I think that's important to look at. But again, I will go back to it. You need to, without emotion, know the numbers. Look at earnings per share. Look at price to earnings ratio. Understand these types of things. Look at the P&L stuff. It's really important. That's the stuff that will give you the conviction to ride through this stuff and go, it's not the company. There's a macro scenario playing on here that I can't control. Nobody else can control. Fair enough. And that's what it is. The Fed at some point are going to make changes. Everybody knows that will happen. Again, history has taught us lots of things. They do what they do. And we see that. But where are we now? M2, we are in a currency contraction phase. Therefore, what's going to happen to all the stocks? Well, they're going to get clobbered. And the ones that went up the most are going to come down the most. It's simple physics.
Oh, yeah. Yeah. I mean, just looking at PE, I mean, you think about, the NASDAQ obviously moves way more than the broader market.
Yeah.
But, PE compression, you squeeze it down more. And as soon as that PE compression whole scenario goes away, guess what's going to come back stronger? Those high PE stocks. And guess who's actually going to be profitable this time? Tesla. So,
exactly.
you just multiply the fundamentals on top of what the macros are allowing for you. And when that blanket lifts, we're just that spring compressing. I've been saying it all year. We're spring compressing. And as soon as that thing goes, the longer we're staying compressed, the stronger we're going to bounce back up.
Yeah, it's a very good analogy, Tim. Yeah, thoroughly. I agree with that, and not just from opinion, but from seeing it. It's happened many times in many companies. Happened with Amazon repeatedly. You know, and it will likely happen again.
Yeah.
Again, regardless of what you might think of Amazon as a company, the same thing. It's the same gig. What were they down to? It was 76% we looked at.
Yeah. And it happens. It cycles through. You get your opportunities, come back in, and you just ride it out. That's really it.
Yeah. All sensible stuff. I like it. Good.
All right. We are going to head off here. We've been on for an hour and a half. Is there anything else you want to share with everybody, Adam?
I think the only thing that I would say here is be aware of the bigger picture, and I don't mean that in a cliched way. I mean that in a considered way, which is the share price right now a direct result of Elon messing around on Twitter, or is it a direct result of the overall macro situation that Elon has zero control over? And I think that's a question for people to ask themselves, and not a question for me to answer. And that would be my closing remark on it. I think that's important. And to add to that, have the company fundamentals changed at all, for better or for worse? And that's it.
Yeah.
So you're in this for the long haul, and I use that definition of generational as 30 years, because on average we have children every 30 years. If you're in this for 30 years, you've got a bargain of your lifetime right now. Yeah, it might go lower. So be it. It is what it is.
Oh, yeah. And I think about my son. I'm like, when he was born in 2006, if I hadn't started investing into Apple and Amazon back then, and I put in a little bit every single day as a dollar cost average, kid would be able to pay for college plus at this point.
Yeah.
Without a question.
There you go. Yeah.
And it's perfect.
And that frames it beautifully. Yeah. Good stuff.
Willie, great show. Tim, nice to meet you, Adam. So
cheers,
thank you guys. Thank you, Adam, for being on here. If you guys do not follow him, he is over on Twitter. I will put the link to his Twitter handle over in the description and the pinned comment below. Adam, thank you so much for your time tonight. I appreciate it. I know it's late there in the UK.
That's all right. That's fine. I kind of operate on Eastern time most of anyway.
And thank you, everyone, for being on. This was awesome. Thank you guys so much.
No worries. All right. Appreciate it.